So it's been another stellar year in my portfolios, and it seems like the only losers this year are those who didn't buy stocks because of all the fear and everything else. I mean, seriously, if you're worried about this indicator or this flashing a recession or whatever, you have missed out on a ton of money this year. But the question becomes, is there more upside to go for these stocks, or are they going nowhere for a very long time? So let's review the stocks that I bought this year, not the best performing stocks overall in the stock market. I'm not gonna cherry pick like that. Just simply the stocks that I bought this year to see A, how they've done, and B, is there more upside with these stocks? Because you guys own a lot of them, and I'm sure you're wondering the same exact thing. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're gonna get today. All right, so let me give you guys some kind of context about this so that way you understand exactly where I'm coming from whenever I make statements like I just made. This year, just this year, I have made 82 buys across all of my portfolios there. And out of those 82 buys, I am up on 80 of them. And some of those buys are up significantly. We're talking multi-year gains in just a few months in some of those stocks. And if I'm being honest, guys, having done this for over 25 years, this is how most years line up for a disciplined, principled investor. You basically just buy when it makes sense and hold. None of the games, none of the trading in and out and tracking all these 8,000 different indicators or anything else like that. I've done none of that over the past 25 years. And this is exactly how most years lay out, is exactly how this year has gone. The key principle is buy and hold and let time, compounding, and the management teams do their jobs. In the end, your winners will more than cover your losers. So my 80 winning buys this year will more than cover the 2 losers by a lot, by a ton actually. And some of those losers may actually turn out to be winners in the long run. As long as you're not speculating too much, going all in on penny stocks or any other ridiculous things that get pushed out there, or buying stocks at sky high valuations because they just have to go higher because of, I don't know, random things, charts, graphs, point things, I don't know, PowerPoints, future things 10 years down the line. Whatever the case is, as long as you stay away from all that, you're going to be just fine as an investor. So let's start with my 2 loser buys this year. Now, those 2 loser buys out of my 82 buys are actually in SOFI at the beginning of the year when I was just illustrating a simple DCA. So I bought some shares at I think $8.99, $8.20 or so was the second buy there. And I'm down on both of those buys, approximately 10% or so respectively. I've made 34 other buys in SOFI, with a lot of those being up over 40%. So obviously overall in regards to SOFI, I am way up on my own position in regards to SOFI itself. So I'm very, very pleased with all of my buys in SOFI, if I could talk, with all of my buys in SOFI, because I know share count is what matters in the end. And I think even my buys at $8.99 that are down right now are going to look cheap in a few years, in my opinion. Of course, could be wrong, absolutely. But the point being, I'm still up on the entirety of my position across all of my portfolios. But I had to be honest with you guys and say, hey, I did make 2 buys this year in SOFI that are still down for the year. So I've got to bring that to you guys. Now remember, I'm buying and the reason why there's so many buys in SOFI specifically is because I'm buying in our portfolio challenge, where I basically have to buy every single week, regardless of what the prices are of the stocks I want to own, to illustrate that just simply a little bit of money each week, done continuously, not timing the market, not jumping in and out, not playing any sort of games, just basically a DCA and no other really way to call that. Every single week is going to outperform every other strategy over the long run. So you got that portfolio. Then you have my 5 other portfolios as well, using my other strategy that I love to use, which is a modified DCA. That's all that I've been doing. But either way, across the board on all of them, all the portfolios, SOFI has been a big winner overall, but I did have 2 buys that were, I guess you'd call them misses. I don't call them misses because I care about share count, not about are they up or down in the short term there. So I've got 2 buys that were down on that, but all the rest of the buys are up. But the question I know you guys want answers to is there more upside for SOFI stock? The answer to that question is yes. I do believe there's more upside, but we are approaching kind of that fair value metric. And for me, for SOFI, I don't get excited about right now nearly as much as I'm excited about the future 2 years from now in regards to SOFI, based upon my analysis and everything else that I've done on the stock. That for me is when I start to get excited about SOFI. And more importantly, when I look at the list of stocks that we're going to talk about here today, I think there's other stocks with a lot more potential upside coming quicker than what we get in regards to SOFI there. So yes, I believe there's more upside. How much more this year before we get overvalued? Not nearly as much as we were getting a few months ago when you were able to buy, down in the 5s in some cases just a couple of months ago. So for me, yes, there is upside, but we got to be cautious about that because we're getting close to that fair value mark. All right, now that we got the 2 losing buys out of the way, let's talk about the other 80 buys that are up and what stocks they were in specifically and all that good stuff. See if there's actually more upside with these stocks or not. And some of these guys, they're going to shock you a little bit because the list just kind of got very, very interesting this year in regards to what ran, what hasn't run, and where the biggest opportunities lie this year. So winner number 1 is Meta. Now, all of my buys on Meta were bought between $461 and $465 this year. Of course, we were buying it way back in the day, just in 2022 for, 90, 80, under $100 or so. But we're talking about just this year, and just this year, that's kind of the range that I've been buying in. And I'm up over 20% on those buys so far. But the question is there more upside? And to me, yes, there is more upside over the long run. Right now, we are basically trading at fair value, maybe I wouldn't call it really rich, maybe just a touch rich, just a little bit of a hair rich, but we're definitely not on the cheap side in regards to Meta. But for me, their runway is so long and there are so many different levers that he can pull in order to create more EPS, more profits to that bottom line there. So for me, there's a very, very long runway for Meta well into the future here. It's not like a lot of the other big tech to where you're kind of wondering where the growth's going to come from. I can see plain as day where the growth is going to come from with this particular stock. And it's just a question of how fast he wants this stock to grow. That'll be how fast it grows. So is there upside? Yes, it is over the long run though. Right now we are trading at fair value. If you want to call it a little bit rich, I wouldn't argue with you there. It definitely for myself, who already has plenty of shares of Meta, I don't need any more. So definitely not on my buy range right now. But as you can see, even though it's a stock I don't need any more of, whenever it hits undervalued, you just buy, and this is what happens. You end up with a nice easy 20%, which by the way is crushing, the 10, 12% you get every year annually with indexes and all that sort of investing like that. You're already beating that in a very short time with a really, to me, a low risk stock like Meta. So winner number 2 is PayPal. Look, don't ask me. I can't believe it either. We call it PayPal in the group for a reason, because it's painful to own this stock. My buys in this stock have ranged anywhere from $59 to $70, which overall we're up over 20% on those buys. So maybe PayPal's name cannot be, PayPal anymore. Maybe we're finally moving over into PayPal, maybe actually paying us. I mean, we're finally seeing dividends, not dividends like dividend being paid, but finally seeing some gains in the stock itself. And to me, if we're talking about, is there more to this stock? Is the run over with? Are we overvalued? Basically, is there more upside? To me, in the short term, now I'm talking short term here, this one may have the most runway in the short term, the most ability to gain more, because it is the most undervalued of the group right now currently. Now, of course, this can change again, but I have loved everything management has done in terms of execution. The valuation is still ridiculously cheap, and I'm very, very pleased with what management has done so far and how well they have executed to their plan. Now, they got a long way to go here. We still, I think we'll really, really be out of the woods next year in regards to really being able to call some of the things that Alex is doing a total success. But right now we are on track. And in regards to valuation, in the short term, it has the most upside. Now, obviously, a lot of these other stocks I feel have a much bigger upside over the long run. We're talking 5 years from now, 10 years from now, whatever the case is. But in terms of the short run, for me right now, this one right here has the most potential short term to give us the most runway. Now, the next 2 are my biggest winners this year, and one of them may surprise you, one of them may not surprise you, maybe both of them surprise you, I don't know. But anyways, I was a little bit surprised whenever I kind of looked at exactly how much these stocks are up from those buys. So let's get into them next. So winner number 3 is Tesla. Now, my buys in Tesla were at 169 and 141 right whenever they hit those targets. And I told you guys right here on this channel, those were exactly what my targets were, exactly where I wanted to buy based upon valuation and what was going on with the stock in regards to EPS and earnings and everything else. And it fell almost all the way down to those marks. It was all doom and gloom. It was all, oh my gosh, what's going on with Tesla? It's the worst ever, whatever the case was. And of course, I was called a bear and everything else whenever I said, hey guys, this is where I think it's falling based upon valuation. This is where I'm looking to buy. And I just ignored all that and simply executed whenever it happened. So obviously we're up 40% and 69% respectively on those particular buys, and I'm very, very happy with them. Those are great gains in a very short amount of time on a great stock like Tesla. And I know I see you guys comment. Some folks are up on position. Some of you guys are down significantly on your Tesla position. And this is where understanding valuation, being disciplined with a stock like Tesla. Matter of fact, Tesla may be the stock that is the most important piece, is being disciplined. having a direct plan, ignoring all the noise, both good and bad. The bulls are just as ridiculous as the bears, if not more ridiculous than the bears are in regards to the stock. And that can put you in a spot where you are constantly down on the shares you buy instead of being in a spot like we're in, where you are up significantly on the shares that you bought instead just this year, not including past buys. Just this year, you were up significantly on those shares. But I got it. Is there more upside to Tesla? And for me, long term, the answer is yes. Short term, I'm telling you guys right now, the answer is who freaking knows? This stock is wild. All that I know is we need to see some better earnings to push the valuation up, or else it is still trading rich in accordance with valuation. It is still trading incredibly rich. So we need that EPS number to start improving. We need margins to start improving. We need those growth rates to start increasing a lot more than they have right now. I got it. Energy's growing like gangbusters. Unfortunately, the cars make up the vast majority of the revenue and the profits to the bottom line. So those have to get going in order for us to continue to kind of move it from overvalued territory right now into more of an undervalued territory, so that way we can get the next big leg up running. But again, the key to owning Tesla successfully and successfully buying and not getting caught FOMOing or getting scared to death out of your position is understanding valuation. That is the key to investing in general, but especially with Tesla. It has kept me repeatedly from making the mistake of buying high, and also had me buying whenever the deals were incredibly cheap and the fear was at max fear. So you have to understand valuation. And if you don't understand valuation and you want to see my 82 buys in real time, make sure you take advantage of the September stretch sale that's going on just for a week here to get us through September, because October is supposed to be doom and gloom, which means I'm going to be buying if that actually happens. So make sure you check out the pinned comment down there. We'll talk more about it at the end, but it's the pinned comment down there. Take advantage. And on to the biggest winner right here. And yes, those members got to see these buys in real time. That's the benefit of being in the group there, guys. You get them in real time. So winner number 4 is Palantir. Now my buys for Palantir this year, obviously we were buying a lot of shares back in the $7 range, $6 range when everybody was freaking out and I don't know, Alex banged the table. So therefore it's a terrible company. I have no idea. It was crazy times back then. But the buys this year are anywhere between $20.79 and $21 and some change. So that right there was where the shares that I bought this year were right in that range right there. And we are up over 70% on those buys so far. Actually, it may be 75% now. I don't know. It just seems like Palantir runs every day. It just kind of one of those things that we've got to enjoy for those of us that bought at the appropriate times and not waited and hesitated. We have full positions. We have beyond full positions. We're into bonus shares right now. So it makes it a great time. And even if you were trying to build out your position, you got a chance to see those buys in real time. But the question becomes right now where it's at, is there more upside to the stock? And in terms of where it's going to trade in the short term, I have no idea. But in regards to valuation, we are extremely stretched at this stage. It is stretched in regards to valuation. Now, we're not crazy 2021 type territory in regards to valuation, but we are absolutely stretched beyond what I would put fair value at the end of the year. And if we continue to run and get up over $40, we may be pulling next year's gains into this year as well. So long term, in terms of 5 or 10 years from now, I think there is massive upside to Palantir, and you're going to be just fine regardless of what if you're doing a simple DCA, continue to DCA. I think there's massive opportunity long term. In terms of the short term here, which is what we're talking about, can the trade continue to go? Of course it can. They continue to run to 40, 45. We've seen it. Palantir went to 40 in 2021 and it had nothing. It wasn't nearly as good of a company then as it is right now today. So is it possible? Of course that it is. In regards to, is it overvalued? Yeah, we're already in the overvalued territory. And if it continues to push higher, it just continues to get more and more and more overvalued. But long term, I think it has an incredible amount of upside, and it might have the most upside in regards to all the stocks that we've talked about. Maybe not in the short term, maybe not in the next year, maybe not in the next 2 years, but in terms of 5 or 10 years out, the potential is there for this to be the biggest and has the most upside of all the stocks we've talked about today. And guys, don't have that feeling like you missed out on all these great buys this year. And I'm illustrating these. I hear the same exact thing every single year. I heard it in 2021 because you were able to buy Apple in the low 100s. 2022, of course, you could see you were able to buy, Meta, Google, Amazon in the 80s, and just tons and tons of great stocks, Palantir in the 6s, tons of great stocks low. 2023, same thing. You got Palantir in the 7s. halfway through the year there before it finally went on its run. And of course, the buys we just talked about now. So every single year, there is great buys in the stock market. So make sure you take advantage of the September stretch sale where you get access to that. You can see all those in real time. You can take 5 courses for free so you can learn how to do valuations. So that way you don't have to just depend on me. You know when a stock is overvalued and undervalued and you should be buying or you should be laying off. Get your free coaching. Use our stock analyzer tool for free. Be a part of the best 6, 7, and 8-figure Discord out there. Jump on our live Q&As. You can ask me questions anytime you want to answer every single question. Guys, there is so much involved. We have a bunch of super investors in our group. They're helping you out specifically. There's so much. There's no group that offers more for less. So make sure you check out the pinned comment. Take advantage of the sale before it expires and the price goes back up. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.